please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, welcome back. 115, 116 odd points is where we are at on the Nifty right now, 10,592. You know, I just want to highlight what's happening with Interglobe Aviation, Indigo. It's up now from the lows. The low was about 1140 or so, which is the low day before yesterday. 1140 is gone up to about 1274. Now, you would obviously, as they say, tough to almost impossible to pick the bottom or the high. But the fact is, you know, even if you got on along the way, you're actually making a fair bit of money. What seems to be triggering the move is, of course, a slight dip in oil prices. But even without the dip in oil prices, one has to remember that now for, you know, last 3 quarters or so, numbers have been super strong. Numbers have beaten quarterly expectations every time. And the stock didn't really react. I mean, it actually kept languishing. It got to about 1400 or so after, I think, the quarter before. But it kept sort of dipping. There were 2 share sales as well. I mean, promoters sold stock in the market. That kind of sort of kept the price under check because markets were anticipating when the next share sale is going to be. But now that is also behind us. Monthly traffic numbers, etc., super strong. And now maybe oil seems to be providing that trigger per se right now. But it's a big move, 60 odd rupees on Interglobe. It's a much slower name. I mean, if you want, you know, the highs and lows of the excitement and stuff, you should probably look at Jet. But this one is the market leader. Slow mover. Hasn't done very much over the last 1 year, but is starting to move. Let's see where it heads. Ashwani Gujral is with us. Ashwani, thanks very much. Good to have you with us here. Thanks very much. Your sense on the move that we're seeing, 120 points, and whether this will last or this will get sold into at some point.
It will certainly make you believe that the real thing has started again. And you know, you could have a multi-day pullback also. But the key point here is that whether you are able to get past the 20-day moving average, which right now is about 10,800, 850 thereabouts. And on the Bank Nifty also, it's further higher, maybe somewhere like 26, 400, 500. So within that context, this is a good pullback rally. I think intraday people should, you know, buy into it and enjoy it because chances are the downside is not done. At least the evidence of that is not available yet. This is just big short covering because everybody was on the other side. So the market will clean out shorts before it does the downside again.
Okay. Ashwani, morning. What are the stocks you're looking at?
Well, on stocks, Indigo is a buy with a stop of 1240, target of 1300, very close to its 200-day moving average, plus has triggers of crude, etc. Motherson is a buy with a stop of 360, target of 385, and IT is doing particularly well. So Tech Mahindra is a buy with a stop of 600, target of 650.
Fair enough. You know, these sort of the beneficiaries of oil price decline, Ashwani, anything comes to mind in terms of stocks?
Typical, you know, HP, BP, aviation, paint. But, you know, these are cute trades. Where are people short? In a pullback rally, the things which will do the best is where people are short. And that's why you are seeing the banks do particularly well. So this is not the kind of time where you play triggers. Instead, you try to figure out where are the maximum shorts.
Okay, let's get some questions answered for our viewers. Sham is the first one. He wants to know if Aisha Motors is a good buy at the current levels. Ashwani, Aisha.
It's gone through a mini bear market. And the good news is that the downside is probably a couple of thousand, 26,000. And upside, if it starts, could be back to 34,000, 35,000. So this is one of those stocks which is way ahead in its you know, correction cycle than the rest of the market. So maybe even in this fall, it could fall a lot less.
All right, Ashwani, thanks very much for the moment for joining in. Let's shift focus to a new listing, Galaxy Surfactants. The stock is up, what, 8.5%, 9% today. It was a good listing. So it listed at what, about 1520. It's moved up to about 1600 since then. Yash Jain, my colleague, caught up with Yu Shekhar, the founder and MD of the company. So let's hear him out.
See, the total IPO size is 937 crores, which has happened in the form of offer for sale by existing shareholders, most of whom are minority shareholders. Okay. Most of these shareholders have been with us for the last more than 30 years. A number of them became shareholders in 1995. Right. That was the first or the last time that Galaxy raised funds. That was, of course, for putting up a global technology state-of-the-art plant at our Taloja way back in 1997.
Sir, because it's a complete offer for sale issue and the company has had a very robust expansion in the last few years, going forward, of course, you have a strong expansion pipeline. How do you expect to fund that expansion? How would you look at raising funds for that particular expansion plan?
See, if you see all the expansions since 1995 have been met by internal accruals. The company generates a cash flow of approximately 150 to 200 crores year on year, and we do feel that this should take care of the expansions as they happen going forward.
Sir, talking about the financials, what was your top line growth, let's say in the first half of FY18? What was the profit picture, and of course more importantly, how did the margin shape up in the first half?
Okay, as we have declared in the first half, that is September 30, our top line grew by approximately 10% or so, and our bottom line was about, that is profit after tax was about 75 crores of rupees. Yeah.
See, EBITDA grew at about 8.2%, over 8% CAGR in the last 4 years. What is the kind of further improvement do you see in the operational performance going forward? What kind of growth do you expect?
Okay, as you can see, our strategy going forward is one of growing on our product portfolios, both performance and specialty ingredients portfolio, both in the emerging markets as well as the mature markets, backed by our focus on product development and innovation. And we will continue to improve our financial performance based on our cost engineering programs and focus on innovation. Okay. Now, we will also increase the value share of our customers and grow customers in various geographies.
So can we expect a growth of over 8%, 8.5% as far as the operational performance is concerned?
If you see the last few years or so, our return on capital employed has averaged more than 24%. The return on net worth has been about 27 to 28%. Our PBT has grown at a CAGR of about 18% in the last 4 years, and similarly PAT has grown at a CAGR of greater than 22%. Okay. So this has been the performance of Galaxy over the last few years, and so we don't see any reason why we should be able to maintain the momentum. Yeah.
So as far as the international market is also concerned, that has in the surfactant space has grown at about 6.5%, and in terms of the personal care portfolio has grown at about 8%, and of course a similar growth is expected in the coming years as well. In the international market, what kind of growth do you expect for Galaxy surfactants in both these verticals?
Okay, as you know, we have been growing in the various markets outside India, particularly the Africa, Middle East, Turkey market, and our specialty ingredients have grown pretty well in these markets because these are driven by premiumization, and the specialty ingredients cater to the premium end of the market, what we call the prestige end of the market, and our platforms and the innovation that we have done on the various platforms like non-toxic preservatives, sunscreens, and mild surfactants should hold us in good stead in the coming years in these international markets. We have been at the cutting edge of innovation with respect to all these, whether it is mild surfactants or non-toxic preservatives or the sunscreens. So these have grown pretty well, and we will continue to grow on these platforms in the international markets.
Okay.
Looks good for the market as of now, so about 400 points higher on the Sensex. The mid-cap index up 300 points. T.S. Anant Krishnan, CEO of Varanium Capital Advisors, joins in now to discuss the market. Hi, Anant. Good morning to you. The last few days, wow, they've been what a wild ride, right? You've probably been in the front seat yourself. What's the take now for investors? I mean, is there a strategy that one can deploy in a market like this? I mean, what do? Do you look at stocks? Do you look at the overall fundamentals? Do you look at economic fundamentals? What do investors do?
So, I mean, I think the correction was good. It was needed because given the valuations as well as how mid and small were rallying up, it's good to have these corrections. It puts it brings in some bit of reality into the markets. The way we are approaching the market really is we are taking a barbell approach where we are looking at 70% of our portfolio to be in companies which are effectively showing earnings growth and have been sustained, where the earnings growth has been sustainable. And valuations have been quite reasonable. So the likes of pharma or technology, where you have double-digit earnings growth.
Just forgive me for interrupting you. Bharat Forge numbers are with us now. So the bottom line actually pretty much in line with what we were expecting. So 228 crores on that one. Our own poll had thrown up a number of 221 crores. So that number looks good for now. The stock is shooting up. I think we'll have to quickly open the P&L and see what else might be there. Prashant, do you have any more details?
Just trying to get the basic numbers, but that's all we have. And the numbers seem to be in line, at least on the profit front. Let me just try and get the numbers. Now, I don't have the release yet. Okay, outcome of board meeting. Revenues up 47%, 1391. Revenues seem to have grown quite a bit. I think the next number we should have is the margins, which should be coming up in just a bit from now. Okay, I think I have the release now, which is opened. Let me get to some.
I think we'll have Sonia also joining us in just a bit. The stock itself was up actually quite a bit before the numbers came out, and it was expected that it would be a strong quarter for them as well. Shippage tonnage trend has been improving actually for the last 7 odd quarters. So 29.9% again, margins appear to be in line with what we were expecting. Sonia, the numbers looking good to you?
Yes, they're looking very good, and as you rightly pointed out, the most important internal for the market has been the shipment tonnage, and the shipment tonnage has grown exceptionally well. We've seen the North America truck orders have gone up between, January to October. They were up almost about 40% or so. Even the shale gas business is doing quite well. So it's been firing on all cylinders for Bharat Forge. These numbers are in line. The street was expecting a good set of numbers, and a good set of numbers is what has come through. Also, in terms of, the breakup, I'm just waiting to see what the export versus domestic breakup is. The domestic CV business has done very well, so that's something that has also aided them this time. But for now, these are very good numbers. Just waiting for the breakup between, the export and the domestic business.
For them, cost of raw materials has spiked quite a bit actually this time around. Was that something that was being worked with?
Well, I guess because you have a more amount of sales, right? So on account of that, you're seeing higher amount of raw material costs for sure. That should not be too much of a problem. I'm just trying to get to the press release to find out. Generally, they give out guidance as well in the press release that the management issues. For now, these are just the basic numbers, which are looking pretty good. Also, these numbers are have grown both quarter on quarter and year on year. So if you look at the revenues at 1,390 odd crores, this is a growth that we are seeing both quarter on quarter as well as on a year basis. And this EBITDA margin figure as well, if you look at the trend, the company has managed to hold on to these 30% EBITDA margin levels at least for the last 5 to 6 quarters because most of their businesses are doing pretty well. Like I said, the domestic commercial vehicle business is doing well. The shale gas, the oil and gas business is also picking up now, and the North America truck orders have done pretty well. So all of this put together has sort of made their entire profile look pretty good. The management has in the past said that, raw material cost pressures is something that they're sort of working with, but that's not too much of a concern at all. And I think this EBITDA figure of 416 crores is something that will definitely go well with the street. It was higher than most of the estimates that I had from brokerages.
All right, Sonia, thanks very much for that. Stocks up about 3% or so. We'll have more commentary analysis in a bit from now. Anant, back to you. Sorry, we interrupted you with Bharat Forge. If you want to talk about Bharat Forge, go ahead. Otherwise,
no, it's an excellent set of results. And as I said, when we were looking at the approach that we were taking, we were looking at companies which are consistently producing earnings. Bharat Forge being one of them, especially in the auto ancillary segment. Two sectors which have not really been popular, which is technology as well as pharmaceutical. We see earnings revival out there. We think a 10% growth visibility, something like an Infosys, which effectively is showing ROEs of 23-24%, consistent 10% double-digit growth that we are expecting out there is a good play at this stage. So you're having on one side you take a barbell approach of consistent returns, consistent earnings, and then you take a look at some of the smaller mid-cap as well as turnaround stories where we're seeing, especially in the E&P space, some turnaround. We are also started to seeing in the engineering and procurement space quite a bit of turnaround. So that's the play that we are essentially positioning at this point.
All right, what we'll do is take a break, but one quick reminder on Bharat Forge. Do remember at 2:10 we'll have Amit Kalyani, the ED, speaking with us and detailing the numbers. So do remember.
127 points or so. I mean, so basically over the course of the last, 30 minutes or so, we've had these 20-point dips and 20 points have been bought back. We're right back almost at the day's high. T.S. Ananthakrishnan is with us. Anant, you were telling us areas that you like: E&P, EPC, pharma, IT, auto ancillaries. Let's name some names now in terms of ideas.
So, I mean, from a pharma perspective, we've been investors in Aurobindo as well as Jubilant for a long period. We think Sun Pharma is a turnaround story. And similarly, in the auto ancillary space, we have, besides the OEMs that we do own, like where we have consistent set of earnings, like the Marutis of the world, the Aishas of the world. We also have in the mid and small cap names like Jamna Auto. The other being in the engineering and procurement services, you essentially have names like L&T, and then there are smaller names that we are already invested in. So the approach that we are taking is to look at consistent set of numbers, look at turnaround stories which will give you the alpha, and expect at this point, given the fact that the market's already pricing in an earnings revival, you're not going to get more than what the earnings growth returns are. And if where the expectations are belied, that's where you would see fall in those particular names. So
earnings basically across the board, generally speaking, have to catch up to where prices already are.
I would completely agree with that. But we are seeing the first signs of them. I mean, this quarter, at least the earnings season has been in line. Now, I agree that the earnings expectations have also been brought down, but at least you are seeing some bit of positive commentary from the technology space, some bit of positive commentary from the pharma space. You have started to see order book increases as far as the likes of L&T, BHALE, some capex announcements both from the likes of ONGC, HPCL, which board which is positive for the pipeline companies. So from that standpoint, I think we should see broad recovery, but it's a wait and watch until we see it.
Pipeline, something like Jindal Stainless?
No, Jindal SAW, names of that kind. Because many of their orders which were in the past or given by GAIL were low margin orders, but many of them are getting executed, and they're seeing an uptick in earnings in order book. So we expect the earnings to also recover there.
But overall now it's largely the tilt is large caps.
Exactly, because if you look at large cap vis-a-vis the BSE mid and small cap, there's a 28% premium as far as the mid and small cap are concerned. So your risk reward is better to be in the large cap than in the mid and small cap. Having said that, there are a lot of opportunities in the mid and small cap which we would still continue to play.
All right, Anand, thanks very much for joining in today. Well, also very positive and strong commentary coming in from the management of Bharat Forge, expecting Q4 demand to be stronger than Q3. Almost 450 points now on the Sensex. The Nifty is up about 130 points, and a couple of stocks doing exceedingly well. So from the frontline space, look at Indiabulls Housing Finance. The stock is up and about and sitting at the high point of trade right now. It's a good-looking chart, actually. Otherwise, some of the F&O stocks also doing well. IDBI Bank, for one, the stock is now up about 7%, and about the bulk of that, actually, about 5% has been added just in this hour alone. So that stock too seeing a very, very smart spike. Sun TV is another one, up 4.5%, seeing a sharp spike over there. As well as, Interglobe Aviation. Prashant has been talking about some of those aviation names, but they are just going off the charts. But with that, we'll wrap up on Trading Hour. Do stay tuned.